Welcome to the One Deal Millionaire podcast, where we don't just bounce properties, we flip mindsets. I'm JD Allen, Marine Corps veteran, engineering leader, and your multifamily investment mentor. If you're stuck chasing small gains, we're here to change the game. Each week, we dive into strategies to bounce your way to your first million. No fluff, no hype, just real talk, real deals, and real momentum. In today's episode, we're going to discuss the real reason why 1 in 3 investors are seriously struggling or failing, so stay tuned. The real reason why 1 in 3 investors are seriously struggling, it's not the market, it's not interest rates, it's not the competition, it is them. It's the way they approach the game and the way they chase deals without discipline. They buy based on hope instead of actuals. They get hyped on potential, but never master the fundamentals. They want passive income, but treat it like a hobby. This isn't a hobby. It is a business. And if you treat it like one, it will pay you like one. But if you treat it casually, it will break you. Today, I'm going to show you the root cause of that struggle and how to break the cycle with mindset, systems, and execution. Because you don't have to be the 1 in 3 that fails. You can be the one who figures it out, the one who learns how to move with intention, build real cash flow, and take your investing from chaos to control. Let's pull back the curtain. The numbers don't lie. Over 30% of new real estate investors quit in the first 2 years. They don't scale, they don't cash flow, they get frustrated, burn out, and bounce the wrong way, straight out of the game. And no, it isn't because they weren't smart enough. It's not because they didn't try hard. It's because they never built the foundation. They walked in thinking real estate was easy, passive, predictable, plug and play. They thought they could throw money at a duplex and watch it print freedom. But freedom has a price, and that price is paid in due diligence, discipline, and details. Most of these struggling investors, they bought based on pro forma fantasy, not actual reality. They let brokers tell the story instead of demanding the numbers to back it, and they didn't stress test the deal. They didn't plan for the 20% vacancy. They didn't run worst case scenarios, and they didn't expect a roof leak, a bad tenant, or a surprise code violation. And when reality punched them in the mouth, they had no process to lean on. No system to stabilize the storm, just panic, regret, and sometimes bankruptcy. But here's the twist. The top investors, they faced the same storms. They had deals go sideways, and they had the tenants to skip the rents. They had HVAC units die in the middle of July. But the difference, they were ready, they had reserves, they had checklists, they had clarity, and they understood that real estate isn't about luck, it's about leadership. You don't need to be the smartest person in the room, but you do need to be prepared. And that preparation starts with treating this like a business. Because if you treat this like a weekend hustle, it's going to hustle you. And I'm going to tell you, I get it. It's not sexy to talk about systems, spreadsheets, and that scenario modeling. But that's where the real freedom is. That freedom that comes after the work. After the underwriting and the cash flow tracking and the tenant screening and the property management system and all those capital plans, it's earned, it's not imagined. So let me say this one more time for those in the back that weren't paying attention. 1 in 3 will quit. That's a fact. And it's not because the market took them out. It's because they never took themselves seriously enough to build what mattered. So here's the question that I want you to ask yourself right now. Do I want to be the investor who hopes or the one who handles? Because in this episode, I'm not here to motivate you with fluff. I'm here to equip you with clarity, to show you what's really going wrong and how to fix it for good. So let's go a little deeper, because once we move past the surface stuff, like the interest rates, the broker lies, the overpriced deals, we hit the real danger zone. And it's made up of those silent killers. Things that don't scream at you. They just quietly sabotage everything you're building. So let's break it down. Number 1, inconsistency. Most investors don't lose because of a bad deal. They lose because they only work when they feel like it. They're all in on Monday, but ghost the process by Thursday. They get pumped from a podcast, analyze one deal, and then they disappear for 3 weeks. Real estate doesn't reward you for hype. It rewards you for habits. You've got to show up whether the market's hot or cold, whether the motivation is there or not. You need rhythm because success is built on what you do repeatedly, not occasionally. Number 2, no feedback loop. You can't grow what you don't review, but most investors never track their performance. They don't journal deals that went bad. They don't debrief after a bad showing or a failed LOI. That's like flying a plane with no instruments, just hoping you're headed in the right direction. So you've got to ask, what worked? What didn't? What will I do differently the next time? Because every mistake is tuition if you actually learn from it. Otherwise, it's just wasted pain. Number 3, fear of reality. This one's big. A lot of investors avoid actuals because they don't want the truth. They want the dream, the upside, the if I just raise rents $300 overnight scenario. But here's the deal. Pro forma investing is like fantasy football. Actuals are where the real game is played. If a property is 60% occupied, bleeding expenses, and mismanaged for 10 years, don't pretend it's a stabilized Class A in a brochure. Get honest. Run the numbers as is. Then plan your value add strategy from the ground up. Truth isn't the enemy, it's your compass. Number 4, lack of leadership. Here's the one that most people miss. You're not just buying buildings, you're leading people. Contractors, managers, tenants, vendors, investors, and if you don't know how to lead, the whole thing crumbles. You've got to be the one who brings calm in chaos, who casts vision, who owns problems and drives solutions. This is what separates the weekend warriors from the serious operators. Now remember, these 4 silent killers won't knock on your door. They'll sneak in while you're distracted. While you're celebrating one win, they're setting up the next loss. So if you're wondering why you feel stuck, if you're exhausted, confused, or secretly afraid you're not cut out for this, I want you to know you're not broken. You just need structure. You need strategy. And that's what we're going to unpack next. Now let's talk about the one thing that actually determines whether you make it in this game. And it's not your net worth, your credit score, or even your deal flow. It's your mindset. Now, I've seen investors lose money with great deals, and I've seen others win big with tough deals because they had the right mentality. Your mind is the first asset you invest in, and if it's weak, every other asset will fall. Let's get real. Some investors walk into the game already limited themselves. They say things like, I'm not a numbers person, or I'm not a negotiator. That's just not me. That is a fixed mindset. That is a mental prison, and it's the worst thing that can actually happen to you. It feels true, but it's just a story you've been telling yourself for years. Whereas a growth mindset says, I don't know it yet, but I'm going to learn. I've never done it before, but I'll figure it out, or every failure is a feedback. That shift, that's the difference between a bounce and a breakdown. Let's also talk about ego over execution, because some people would rather look like they know what they're doing than actually learn what they don't know. They fear looking like a beginner more than they fear losing the money. So they don't ask those questions, and they fake their way through the meetups, and they act confident but go home confused. Now that's not bold, that is just dangerous. And let me be real with you, you can't fake it in this game. You are either building skills or you're falling apart. Now the best operators, they're humble students first. They ask those dumb questions and they admit what they don't know. And they grow faster because their ego doesn't get in the way. Here's another one, identity and self-belief. The most overlooked part of investing, belief. If you don't believe you deserve to own $1 million property, you'll subconsciously sabotage yourself every single deal. You'll fumble those negotiations, you'll pull out in the last minute, you'll second guess yourself into oblivion. Because somewhere deep down, you're still stuck thinking, I'm just a construction worker, I'm just a school teacher, or I grew up broke, and this isn't for people like me. Now, let me tell you something. That story ends today. You are not your past. You are not your paycheck. You're not your parents' financial patterns. You are who you decided to become today, right now, in this moment. You build wealth when you start thinking like a wealthy person. And wealthy people don't avoid the problems. They go out and solve them. They don't wait for permission. They create a plan and they move, and they don't hope. They execute. Now remember, this isn't about mindset because it sounds motivational. It's about mindset because it's foundational. You can have all the spreadsheets, all the calculators, and all the gurus. But if your beliefs are broken, your investing will be too. Next up, I'm going to walk you through some system gaps, the missing infrastructure that keeps people from scaling, and how to fix it with the right frameworks, routines, and tools. All right, so we've talked about mindset. That's the internal game. Now let's talk about the external game, because here's the truth. You don't rise to the level of your potential, you fall to the level of your systems. And most struggling investors, they don't have systems, they have reactions. So number one, no pipeline equals no progress. They analyze deals randomly, scrolling through Zillow, maybe looking at LoopNet, waiting for something to pop. Now let me ask you, would you build $1 million business by waiting around for something to show up? No, you'd build a pipeline. The investors who win, they have a sourcing system and they talk to brokers weekly. They send out mailers. They underwrite at least 5 deals before breakfast. It's not magic. It's math plus motion. Input equals output, leads in, deals out, no leads in, no chance of success. Number 2, no underwriting framework. Most investors don't have a consistent underwriting process, so every deal feels like they are starting from scratch. They flip between spreadsheets and they use rule of thumbs they barely understand. And worse, they underwrite to what they hope will happen, not to what the numbers actually say. And here's what the pros do. They use one framework, one process every time. They pull the T12s. They confirm the expenses. They don't fudge vacancy to make the deal look good. They're consistent because consistency builds confidence. Number 3, no asset management system. The deal closes, and that's when most investors unravel. No plan for managing CapEx, no communication with property management, no weekly check-ins, no system to measure like rent collections, turnovers, repairs, occupancy trends. It's like they crossed the finish line, not realizing it was actually the starting line. Real money isn't made on closing day. It's made in the 12th month after. That's where the real wealth is built or buried. Number 4, no exit plan. They go in thinking, I'll figure it out later. But exit strategy isn't a footnote, it's the whole point. Are you refinancing, selling, holding? At what valuation? Based on what cap rate? What needs to happen to hit that goal in 12, 18, or 24 months? Without those answers, you're not investing. You're just gambling with a nicer suit on. Now here's the final word on this section. If your results are inconsistent, it's not your market. It's not your broker. It's not the economy. It's your system or lack of one. But here's the good news. Systems can be built step by step, block by block, and that's why I created the bounce method. So let's bring it on home. We've talked about why 1 in 3 investors are seriously struggling. And now you know the truth. It's not bad luck. It's not just timing. It's not that real estate doesn't work. It's mindset gaps. It's system gaps. It's silent killers hiding in your habits. And it's the lack of structure that turns ambition into anxiety. But the good news, now you see it. And what you can see, you can change. You can build a mindset that faces fear, not flees from it. You can build systems that make decisions clear repeatable, and scalable. You can treat this like a business it is and get paid like a business owner, not a hobbyist. Look, I don't care where you're starting from. Whether you've bought 10 properties or you just got inspired on YouTube last night, you are one system away, one mindset shift away, one bold step away from flipping the script on your financial future. Mindset isn't fluff, it's the fuel. Systems aren't boring, they're the blueprint, and struggling doesn't mean you're failing. It means it's time to evolve. That's it for today's episode of the One Deal Millionaire podcast. If you got value from this, share it with a friend who's ready to stop playing small. And remember, wealth isn't built by watching, it's built by moving. So take what you learned, apply it, and keep the velocity of money working in your favor. Subscribe, leave a review, and stay in the loop at thebouncemethod.com. And until next time, keep bouncing forward.